Portfolio Wealth. Time now to scope out some tech sector picks with our next guest who loves to talk about this. Lee Munson's with us, Chief Investment Officer, Portfolio Wealth Advisors. Lee Munson, you are looking at that tech sector, but more specifically at some Chinese e-commerce stocks. Tell me a little bit about some of these names. Alibaba, JD.com.
Tencent. I mean, I know that some of my fans out there are like, Lee Munson's not talking about tech stocks. He's a value-oriented guy, and he thinks they're overvalued. But here's the problem. There are plenty of tech stocks that are reasonably valued, that have better growth prospects, that are growing faster, and you're going to find that in China. China has not the legacy issues of a bunch of malls and all this stuff. They're just native to e-commerce in the way that mobile payments we found 20 years ago were native to flip phones in sub-Saharan Africa. So when you're looking at Canadian capital today, when markets seem just so frothy and how much more do we want to pay for Amazon, look to China. So the cool thing is, when you look at, say, an Alibaba, Taobao and Tmall, those are your Alibaba owns them both. I know, and most people don't even know what I'm talking about, these places, but they control together 30% of the global market and 60% of China. So you add JD.com, another company that some people know here in the US, some people know, you've got 80% of the Chinese market, 40% of global e-commerce, at a fraction of the multiple, right? And also have not gone parabolic. We've had a nice 10, 20% correction in these stocks since February. The other really cool thing I got to mention, though, is that when you look at kind of constructing this within an index portfolio, which is generally what I like to do, my clients are more conservative, they're retired, they want more boring than just craziness, is if you just take a look at something like MCHI, which is an index, I think it's an iShare, I like to buy it, and that's got 14, 15% of things like Alibaba, Tencent, and big holdings of JD. So if you still want to diversify China's portfolio and you don't want to put it all into one thing, these e-commerce giants, they're very large in a lot of these Chinese e-commerce. So you can get, it's a nice little cheat where you can get some diversification as well as get a lot of exposure. But I much prefer that stuff, Nicole, than trying to figure out how am I going to buy more Amazon at 3,000 because it's.
Well, what about Amazon? You're leaving out our U.S. darlings of Amazon and Etsy and Shopify, and I can't think of all the rest right now, but you know what I mean. What about U.S. e-commerce? Nope.
So here's the thing.
No sale?
I don't like to pay up for those things. And I always like to come off as if I have nothing to do with overpriced tech stocks. But let me tell you what honestly is going on. I've got such a large holding of, say, like S&P 500 style positioning. I'm going to have a quarter of that in my Apple, which I like, Microsoft, I like, Amazon, I like, those three names, Google, I mean, come on, Google, those things right there are almost 20% of the S&P. Now, if you don't own the S&P, do I think that you should own some of those names? Yes, I do. I think that Apple, I think Microsoft, I think Google, and I think Amazon, that's where I draw the line. I think those are the main winners going forward. But I want to caution people, even though I own those, remember what happened to Microsoft in 2000. We're just discussing GE just a moment ago. Microsoft spent 11 years going down 50% while its earnings quadrupled. And so we have to ask, do we want to own these things now at this price going forward? I am more cautious. I am less interested. I'd rather go someplace that's already had a nice 20% correction. The valuations are already lower. And as we continue on with this trade war, forget about the fact that e-commerce in China is 3 to 4 times more in revenue than the United States. It's a much larger, not just addressable, though the revenues today, yesterday, last year, the year before are 3 to 4 times more. So that's where I think you put the marginal dollars, and I'm less interested. Now, if you said Amazon at 3,000,
quickly,
final thought. If you want to get
what
exposure
did you say?
to this, I think if you want Amazon, I think you buy it closer to 3,000 on a correction. Then you can get me to say I would buy Amazon. Until then, I'm going to stick to the Chinese play. The price is right. The correction has happened. Long term, I want to own them.
And you said that's 80% of the Chinese market. Lee Munson, always great to chat with you. Thank you so much. Lee Munson, Chief Investment Officer, Portfolio Wealth Advisors. Thank you.